Jerome Washington, step away from the loan files and keep your hands visible. What's going on? I have appointments since this morning.
Once is a mistake, twice is suspicious. Jerome Washington did this across dozens of files over 3 years and left a paper trail straight back to a single cell phone number.
We're investigating mortgage applications submitted through your office. I process what borrowers give me.
Jerome Washington had spent the last 3 years approving mortgages for people who did not exist. He had moved nearly $4 million in fraudulent home loans through Heritage Commonwealth Bank. He had collected commissions on every single one, and he had told himself every morning when he sat down at his desk in the Matthews, North Carolina branch, that no one would ever notice. But on the morning federal agents walked into the lobby of that branch with a warrant for his arrest, one phone number had already given him away. A single cell phone used to verify employment for dozens of unrelated borrowers had unraveled the entire scheme. 7 years in federal prison, full restitution, a lifetime ban from the mortgage industry. The paperwork that had built Jerome Washington's career was about to bury him in it. Before we go any further, I want you to think about something. When you signed for your home, or the home you rent, or the place you grew up in, how much did you actually trust the paperwork behind it? Sound off in the comments. Tell me if you've ever had a mortgage that felt sketchy. And if you're new to the channel, subscribe now. We break down financial fraud cases like this every single week, and the system fails more often than you think. Jerome Marcus Washington was born in 1980 in Greensboro, North Carolina, the second of 3 children in a family that lived 2 blocks off East Market Street. His father worked the loading dock at the R.J. Reynolds tobacco facility in nearby Winston-Salem. His mother was a substitute teacher in the Guilford County School District who picked up shifts at a fabric store on weekends to keep the household stable. Money was tight, but the Washingtons owned their home. Jerome's mother spoke often about that fact. The deed to the small brick ranch on Oakland Avenue was framed in the hallway next to a high school graduation portrait of his older sister. Owning property, she told her children, was the difference between standing on your own ground and standing on someone else's. That message shaped Jerome. In middle school, he kept a notebook tracking the prices of houses listed in the Sunday paper. He could quote the asking price of every property within a 6-block radius. His mother told relatives that he was going to be the first in the family to work in a bank. He graduated from Dudley High School in 1998 with a 3.4 GPA and a partial scholarship to North Carolina A&T State University. He commuted to campus from his parents' house and majored in business administration with a finance concentration. To cover tuition, he worked 25 hours a week as a teller at a community credit union on Bessemer Avenue. He learned the rhythm of money there, how it moved, who watched it, what the systems were supposed to do. He graduated in 2002 and took an entry-level position as a mortgage processor at a regional bank in Greensboro. The starting salary was $31,000. He moved out of his parents' house and rented a 1-bedroom apartment on West Wendover Avenue. Within 18 months, he had been promoted to junior loan officer. His early performance reviews described him as exceptionally organized, responsive to client needs, and able to navigate complex underwriting requirements with confidence. A supervisor wrote in 2004 that Jerome had a natural ability to find creative paths to approval for borrowers who would otherwise be denied. That phrase, with the wrong reading, would later be quoted in his sentencing memorandum. In 2006, he married Adrienne Coleman, a registered nurse at Cone Health. They moved together to the Charlotte metro area, settling in a starter home in Matthews. Their daughter was born in 2008. Their son followed in 2011. By his early 30s, Jerome was a senior mortgage loan officer at Heritage Commonwealth Bank, a fictional regional lender headquartered in Charlotte's South End, with branches scattered across the Carolinas. He was earning a base salary of $78,000 and commissions that often pushed his annual income above $150,000. By 2014, his neighbors in Matthews described him as the kind of man who waved from his driveway every morning, kept his lawn cut, and coached his daughter's youth basketball team at the YMCA on Sam Newell Road. He served on the finance committee at his children's elementary school, PTA. He was, by every visible measure, exactly what his mother had told him he would become. He was also about to begin a 3-year run of mortgage fraud that would leave Heritage Commonwealth Bank with millions in losses and dozens of falsified files sitting in his underwriting queue. To understand how Jerome Washington was able to approve nearly $4 million in loans for buyers who did not exist, you have to understand how a mortgage actually moves through a regional bank. A typical home loan application crosses 6 separate desks before it funds. The borrower fills out an application with personal information, employment history, and stated income. That application is taken by a loan officer who pulls a credit report, requests verification documents, and recommends the loan for underwriting. An underwriter reviews the file against the bank's lending guidelines. A processor verifies that all required documents are present. A closer schedules the title work and prepares the loan package. And finally, a funder releases the wire to the closing attorney's escrow account. The system relies on each desk catching mistakes the previous desk missed. In theory, no single person can push a fraudulent loan through alone. In practice, that theory had cracks. At Heritage Commonwealth Bank in 2014, the cracks were structural. The bank had grown rapidly during the post-recession housing recovery. Its mortgage department was processing more applications than its staffing could comfortably handle. Underwriters were assigned 90-day approval queues. Processors were measured on speed. The compliance team was understaffed and rotated frequently. Quality control reviews were performed on a sample basis. Roughly 1 in every 20 closed loans was pulled for retrospective audit, and only after funding. The bank also operated on a referral model that rewarded volume. Top-producing loan officers received not just commission, but bonus pools, internal recognition, and the autonomy that came with being a revenue generator. A loan officer who closed 40 mortgages in a quarter was treated very differently than one who closed 12. Jerome Washington understood every layer of that system. He had worked as a processor. He had sat in on underwriting trainings. He knew which fields the underwriters cross-checked and which they accepted at face value. He knew that employment verifications were typically handled by a single phone call to the employer listed on the application. And he knew that if the phone number was answered and the person on the other end confirmed the borrower's salary and tenure, the verification was considered complete. That single phone call, that one weak point in a 6-desk system, that was the door Jerome Washington walked through. The scheme began by Jerome's later admission in the spring of 2015. He needed money. His wife had taken 6 months of unpaid leave after the birth of their son. The mortgage on their Matthews house was straining his cash flow. He was also, by then, behind on a private school tuition payment for his daughter and carrying a balance on 3 personal credit cards. The first fraudulent loan was, by his own description, almost an accident. A friend of a friend, a contractor named Demetrius, wanted to buy an investment property in East Charlotte. He had cash for the down payment. He did not have the W-2 income to qualify. Jerome offered, half-jokingly at first, to help him out with the paperwork. He inflated the contractor's stated income by 40%. He listed a fake employer. He used the cell phone number of a cousin who had agreed, for $200, to answer the phone if anyone from the bank called for verification. The underwriter called the number. The cousin answered. The cousin confirmed the employment. The loan funded. Jerome received his standard commission. He also received a $4,000 cash payment from Demetrius the following week, slipped to him in an unmarked envelope at a sports bar on Independence Boulevard. That $4,000 covered his tuition balance and 1 credit card. He could have stopped there. He did not. By the fall of 2015, Jerome had built a small operation. He was working with 3 primary partners. The first was the cousin, who agreed to be the verification voice on the phone for additional borrowers in exchange for a flat fee per call. The second was a former colleague who had left the mortgage industry to start a document services business in a strip mall off South Boulevard. That colleague produced fake pay stubs, falsified W-2 forms, and fabricated bank statements that matched the inflated income figures on the applications. The third was a real estate investor with a network of buyers who needed financing but could not qualify on their own. The operation refined itself over months. Jerome recruited straw buyers, people with clean credit scores who were willing, for a cash payment ranging from $3,000 to $7,000, to sign their names to a mortgage application that they had no intention of actually paying. The straw buyers were told that the property would be flipped or rented within months, that the loan would be quickly refinanced or assumed, and that their names would be off the paperwork before any payments came due. That was a lie. The straw buyers' names stayed on the loans. The properties stayed in default queues, and when the eventual foreclosures came, the credit damage stayed with the straw buyers for 7 to 10 years. The applications themselves became formulaic. Jerome would generate a borrower file with an inflated income, an inflated asset statement, and an employment verification routed to one of 2 cell phone numbers, both held by the cousin, who by 2016 had a script and a calendar of expected calls. The document services colleague provided supporting pay stubs and bank statements that matched the application figures within plausible variance. The real estate investor supplied the properties, often newly built homes in the Charlotte suburbs where Jerome's bank had standing relationships with builders. Between June 2015 and August 2018, Jerome Washington personally originated and approved approximately 51 mortgage loans through this scheme. The total funded amount was approximately $3,940,000. Jerome's cut, from commissions and kickbacks combined, came to just over $410,000 across those 3 years. He used the money to pay down debt, to fund a kitchen renovation, to buy a 2017 Lexus RX sedan, and to put a 5% down payment on a beach house in Oak Island. He told his wife the beach house was a bonus from a strong sales year. She believed him. She had no reason not to. Stories like this don't get the coverage they deserve. The mortgage industry processes trillions of dollars a year, and cases like this one are happening right now in branches across the country. If you want to see more accountability content like this, subscribe and hit the bell. We do this every week, and the next case is already in the works. The unraveling began with a routine quality control review. In September 2018, Heritage Commonwealth Bank's internal audit team selected a quarterly sample of closed mortgage loans for retrospective review. The sample included 6 loans that had been originated by Jerome Washington over the previous 12 months. 2 of those loans were already in default. That, by itself, was not unusual. Loans default for 100 reasons that have nothing to do with fraud. What was unusual was that an auditor named Cheryl Ledford, a 16-year veteran of the bank's compliance department, noticed that 2 of the 6 files shared the same employer phone number. She pulled up the employer's stated business address. The address was a UPS store mailbox in a strip center in Pineville. She pulled the cell phone number on the employment verification. She called it. A man answered. He confirmed that yes, he was the human resources director for the listed business, and yes, the borrower was employed there. He gave her the borrower's salary verbatim from the loan application. Cheryl Ledford hung up the phone. She walked down the hall to her supervisor's office. She closed the door behind her. Within 48 hours, the bank had pulled every loan originated by Jerome Washington over the previous 3 years. The compliance team began cross-referencing employer phone numbers, employer addresses, and stated employment across all of his files. The pattern was immediate and overwhelming. 16 loans listed the same UPS store address. 23 loans listed phone numbers that resolved when reverse lookup tools were applied to 2 cell phones registered to the same prepaid carrier account. 11 loans shared identical wording in the employer's job description, copy-pasted verbatim. By the end of the 2nd week, the bank had referred the matter to the Federal Bureau of Investigation's Charlotte field office. A formal investigation opened on October 9, 2018. Jerome Washington, sitting at his desk in the Matthews branch, did not yet know. He was, in fact, in the middle of approving another loan. The FBI investigation lasted 11 months. agents subpoenaed the call records for the 2 prepaid cell phones identified in the audit. They subpoenaed Jerome's work email, his personal email, his bank accounts, his credit card statements, and the financial records of every entity listed as an employer on his loan applications. They interviewed 47 of the borrowers whose names appeared on the suspect files. 28 of those borrowers eventually agreed to cooperate. Their statements built the spine of the case. A woman named Tiffany admitted that she had been paid $3,500 to sign a loan application for a property in Concord, North Carolina, that she had never visited and never intended to live in. She said Jerome Washington had personally walked her through the application and told her, when she expressed concern about the income figures listed on the form, that the bank had a streamlined verification process for clients he sponsored. A man named Anthony admitted that he had signed loan documents for 2 separate investment properties in 2016 and 2017 in exchange for cash payments totaling $11,000. He confirmed that he had never received the rental income he was promised, had never made a single mortgage payment, and had seen his credit score drop from 738 to 481 after the eventual foreclosures. The financial trail was decisive. Agents traced cash deposits into Jerome's personal bank accounts that did not correspond to any documented commission payments. They identified the strip mall document services company and executed a search warrant on its premises in March 2019. They recovered a hard drive containing template employment verification letters, blank pay stub templates with the Heritage Commonwealth borrower file numbers handwritten in the margins, and a contact list of borrowers cross-referenced with payment amounts. But the centerpiece of the case was the smoking gun. A single cell phone number, registered to a prepaid account in the name of Jerome's cousin, appeared on the employment verification call logs for 31 separate Heritage Commonwealth mortgage applications submitted by Jerome Washington over a 30-month period. Each call lasted between 2 minutes and 7 minutes. Each call confirmed a different borrower's employment at a different listed company. One phone, 31 employers, 31 borrowers, all verified by the same human voice. The forensic analyst who prepared that exhibit for the grand jury would later testify that in 22 years of mortgage fraud work, he had never seen a more visible pattern. On the morning of September 17, 2019, at 9:14 a.m., 2 FBI special agents and a Heritage Commonwealth Bank security officer entered the Matthews branch through the front doors. The branch had been notified 20 minutes earlier. Jerome was seated at his desk on a phone call with a realtor about a pending closing. The branch manager walked over to his desk and asked him to end the call. The agents introduced themselves. They asked Jerome to step into the branch manager's private office. The conversation that followed was recorded. Special Agent Reeves: Mr. Washington, we're here to ask you about a number of loan files you've originated over the past 3 years. Jerome Washington: Okay, which files? Special Agent Reeves: We can start with the McAllister file, property on Sardis Crossing Drive, closed in March of 2017. Jerome Washington: I'd have to pull it up. I do a lot of files. Special Agent Reeves: We have the file. The employer listed on the McAllister application is Carolina Logistics Solutions, with a phone number ending in 2481. Are you familiar with that company? Jerome Washington: I don't memorize every employer. I'd need to look at the file. Special Agent Reeves: Mr. Washington, that same phone number appears on 31 of your files, verifying 31 different employers. Jerome did not respond. The agents would later note in their report that he set his hands flat on the desk, looked at the closed door of the office, and held that pose for nearly 11 seconds. Jerome Washington: I'd like to call an attorney. The agents arrested him at 9:41 a.m. He was walked out of the branch through the lobby. 2 of his colleagues watched from their desks. Neither said a word. Jerome Washington was indicted by a federal grand jury in the Western District of North Carolina on November 6, 2019. The indictment contained 28 counts: mortgage fraud, wire fraud, falsification of financial documents, and conspiracy. His defense attorney, a Charlotte-based white-collar defense lawyer named Marcus Holloway, filed a motion to suppress the cell phone call records on Fourth Amendment grounds. The motion was denied. A second motion sought to exclude the cooperating borrower testimony as unreliable. That motion was also denied. Faced with the cell phone exhibit, the document services hard drive, the cooperating borrower testimony, and bank records showing nearly $500,000 in unexplained cash deposits, Jerome Washington pleaded guilty on April 22, 2020, to 4 representative counts of mortgage fraud and wire fraud. The plea agreement included full cooperation with the ongoing investigation of his co-conspirators. The cousin who had answered the verification calls pleaded guilty separately and received a sentence of 28 months. The document services colleague pleaded guilty to conspiracy and received 46 months. The real estate investor was charged and eventually convicted at trial. He received 72 months. Jerome's sentencing hearing was held on August 11, 2020, in the federal courthouse in Charlotte. 3 of the cooperating straw buyers delivered victim impact statements. Tiffany, the borrower from Concord, told the court that her credit had been destroyed for nearly a decade, that she had been denied apartment leases, that she had been turned away from a car loan, and that she had been forced to explain, repeatedly, to anyone who pulled her credit report that she had been used. "I trusted him because he had a desk at a bank," she said. "I thought that meant something." Heritage Commonwealth Bank's chief risk officer testified that the losses to the institution exceeded $2,300,000 after foreclosure recoveries, and that the bank had been forced to restructure its mortgage compliance program at a cost of an additional $1 million. The presiding judge delivered a statement before pronouncing sentence. "Mr. Washington, you were trusted by your employer. You were trusted by your borrowers. You were trusted by an entire industry that relies on the honesty of the people sitting in your chair. You did not betray that trust once. You betrayed it 51 times, deliberately, over 36 months. You did not act in desperation. You acted in calculation. The paper trail you built was not careless. It was systematic. And the people whose names you used as instruments of that fraud will carry the damage long after you have served your sentence." Jerome Washington was sentenced to 84 months in federal prison, 7 years. He was ordered to pay restitution in the amount of $2,460,000. He was permanently barred from any future employment in the mortgage lending industry. He was designated to FCI Petersburg Low, a low-security federal correctional institution in Hopewell, Virginia, approximately 4 hours from Matthews. His wife filed for divorce within the first year of his incarceration. The Matthews house was sold to cover restitution obligations. The Oak Island beach house was seized and liquidated as proceeds of the fraud. His Lexus was sold at federal auction. The 51 fraudulent loans Jerome Washington originated produced a long shadow. 26 of those loans went into eventual foreclosure. The properties cycled through bank ownership and resold at substantial losses. The straw buyers whose names were on the loans saw their credit destroyed and, in 7 documented cases, were sued personally by Heritage Commonwealth Bank for deficiency judgments. 3 of those cases ended in personal bankruptcy filings. Heritage Commonwealth Bank itself absorbed losses that pushed its quarterly results into the red for the first time in 7 years. The bank's compliance program was overhauled. The verification process was changed to require independent third-party employment confirmation through a federally registered verification service. Cell phone-based verifications were prohibited entirely. The sample size for retrospective quality control reviews was tripled. Cheryl Ledford, the auditor who had spotted the duplicate phone number on the September 2018 sample review, was promoted to senior compliance officer the following year. She was later cited in a Carolinas Bankers Association case study as an example of effective internal controls. Jerome Washington remains incarcerated as of the events covered in this episode. He is scheduled for release in 2026. He will be 49 years old. He will return to a state where he is permanently barred from the only career he ever built. He will return to children who are nearly adults. He will return to a community where the brick ranch on Oakland Avenue still stands, still owned, still framed in his mother's hallway as the thing he was supposed to grow up and replicate. Instead, he built nothing. He signed for homes that no one lived in. He created buyers who were not buyers. He moved nearly $4 million through a regional bank using a single cell phone and the patience of a man who told himself every morning that no one would ever notice. Someone noticed. The paperwork always remembers. This case was calculated. But the case on the right-hand side is even harder to believe. Click it now.